If you have a supply zone here and you have basing here, and price comes right back up, right up through that zone, if it immediately comes right back down, then that means there wasn't such a big imbalance here where the institutions want to fill in orders. They filled in demand and it came right back down. And the only people that are going to push it right back down are institutions. Okay, so if they pushed it here just to fill in sell orders to push it right back down, then that means this is not a good area to buy. If they push it up here, but they didn't fill in so many sell orders to push it right back down, but instead it consolidated, okay, which means they were either offloading a little bit of those longs or buying a little bit of their shorts, but more importantly, retail traders that were getting in late find out that, oh, this is not going to go any higher, and then they start taking profits, and then all of a sudden it starts collapsing, and then all their longs, they go into a drawdown, and then they sell their long positions for a loss, and then it comes down, and then the institutions get back into their long positions. That's why we want to see consolidate away. It's basically to tell us that this was a zone where the institutions are interested in filling in more of their orders to go in. If they push it up and they push it right back down, then that means that area is not an area that they more likely than not want to start accumulating a long position.